So everybody's calling, as you can imagine, this morning asking what's the impact of yesterday's Fed rate cut. So we did the video yesterday and I said that I was going to continue this conversation, and here we go. So the Feds did have an emergency meeting yesterday, which is really interesting because they couldn't wait 48 hours for their regularly scheduled meeting, which sent the market into a panic. Yesterday, Sunday, they actually had to put a halt to future trading. This morning, the Dow came out down 1,800 points. So they had to halt trading again today. When it came back online, we were down almost 8.9%. So the stock market is not faring well, but it doesn't mean that our interest rates are absolutely dropping with that news, because they're not. We gained a little momentum off of last week, but remember, last week interest rates had risen. So we had come off of 50-year lows on Monday in interest rates, and we slowly climbed all week long. Today, we only came down from that high on Friday slightly. So we're not seeing the full exposure of lower interest rates. And honestly, I don't think we will right away. This is going to be a long game. Manufacturing just came out down 21%. And this is just the beginning. We are heading into a recession if we're not already in one. So should you be worried? That would be the first question. The answer is no. Because right now, we're in the housing market, or at least I will say, if you're in the housing market, this is the very thing that's going to create stability through this recession. Now, things are going to be different today. In fact, yesterday after I put out that video, I had found out a friend had called me and told me that as of 6 p.m. last night, Las Vegas had closed down for 14 days. This morning, I went to my Starbucks and all the tables were pushed in the corner because they're like, we're not gathering here because of social distancing. I mean, I have 3 kids in college, and we already know that the colleges have shut down probably through the end of the school year, so all of them are coming home, right? That's not okay. But beside that, Illegal Pete's is one of their main hangouts, and Illegal Pete's just announced last night that they're closing until this passes. So more and more businesses are doing that, and the drop in the Fed rate and the increased liquidity is to help businesses, help not only businesses stay open as long as they can, but to help them maintain payroll. So as we roll into this, just know that the housing market is the very thing that's going to pull us out. 3 out of the last 5 recessions, we actually saw housing appreciate, not lose value, especially in a low interest rate market like we have today. So if you're a homeowner, you're absolutely benefiting. If you're a buyer, this is a time to take advantage of the improved affordability. If you want to know more about what's going on, make sure to keep tuning in, because we're going to keep doing this every day because there's a lot going on. Nicole, Rueth with the Rueth team of Fairway Mortgage, we're keeping you updated.